Alrighty, looks like we are live on another Properties and Beers. Welcome to another Properties and Beers. So, Victoria, to no one's surprise, absolutely, has a new premier 4 months out from an election. Inflation's taken an unexpected turn, and property investors are once again, feeling like maybe things should be more certain. Maybe they should wait. But you know what? How long should you wait? Until after the election? Until after the next interest rate decision, until inflation falls. There will always be another until. There'll always be another announcement out around the corner, right? And if every headline becomes a reason just to pause, waiting can slowly become the strategy. And let's be honest with each other. Fear is not a strategy you can take to the bank. Fear isn't a strategy that'll set you financially free. Fear is sometimes false evidence appearing real. Sorry, even I forgot that. Now, today, I want to look at what's actually changed, what Victorian investors should be paying attention to, and how we assess a property when the political and economic picture is still moving. Because, you know what? Property, it still needs work once the headline disappears. My name's Gaurav Gupta, CEO and founder of Ethical Property Investments. We help everyday Aussies invest in high cash flow homes designed to do good and make money. That includes co-living, specialist disability accommodation, and other high cash flow strategies, including granny flats, where the investment can provide housing for people genuinely in need while helping the investor build stronger income into their portfolio. And later today, I'm going to walk you through a couple of yield club opportunities as well. So grab a drink, settle in, and let's start with a story that's caught nearly every Victorian investors' attention this week. Now, before we get started, this is Properties and Beers. It's Friday. We've done things a little bit later, and I'll explain soon why. What do we have today? We have one of my faves, Stomping Ground Passion Fruit Smash Sour Beer. Now, some people may be new to sour beer. Sour beer is it's what it sounds like. It's a beer that's damn sour, but it's really sour in a nice way. So if you enjoy soury things, which I do, it's always a good one. So cheers. Always great. Passion fruit smash sour beer. Get it in here. All right. Now, the reason why I'm a bit late today, and I must apologize, is that I was actually at a handover of a property today, a co-living property built for a friend of mine. And you know what? We had a few challenges with the property initially when we tried to get it off the ground, including council, et cetera, but we got it done. And honestly, I could not have been more proud than that property itself. Because you know what? I helped my client buy it at what is probably about $100,000 below market value. So yes, we had to deal with some council issues. We paid a little bit more for the build because of the slope on it, but it's still well below market value. And that's something to be said. Now, I'm going to get a bit more of a sip. But if you're watching, drop in a comment, say hi. I'm watching all the comments on my other screen below. So, Victoria has a new premier 4 months out before the Victorian election, to no one's surprise. And I think property investors should look at this change with some optimism, because Ben Carroll, he comes from the right side of the Victorian Labor Party. He's also widely regarded as more economically pragmatic, and his early comments have focused on fiscal responsibility, stronger engagement with businesses. Now, I want to point something out here. Yes, he's still part of the Labor Party, but whether now this tells us whether we have Liberal, Labor, or any other party, starting with one, come in, it doesn't matter. They're all going to be better for business here in Victoria. Now, we're still going to need to see what policies are announced between now and the election on 28th November. But honestly, the early direction seems positive for business confidence, investment, and Victoria's broader economic position. If you've got a commentary around that, drop it in the comment below. I'm watching it. But I am quietly positive, right? More than quietly positive. I'm bloody optimistic about it, right? And right now, before the wider market fully works out what's going on with this change and what it means, some very, very good property deals are available. Look, for several years, Victorian investors, they've carried concerns about land tax regulation and the rising cost of holding on to property. And these concerns, they've affected buyer confidence, right? Let's be honest with each other. Some investors, they've moved their attention interstate. And interstate's grown. Others have stayed on the sidelines waiting for Victoria to become more attractive again. And you know what? I think the best thing that could have happened this week. A premier with a more commercially minded approach could help change that sentiment. Now, regardless of which direction the election heads in November, we are now in the green, in my opinion. Look, I think we're going to start to see closer engagement with businesses with a greater attention given to Victoria's finances and a stronger focus to encourage private investment. Because you know what? Private investment is what makes this country thrive at the moment, right? That really is what's making things happen. And you know what? Of course, it doesn't mean every policy will suddenly favor property investors magically. We also need to assess each announcement as it comes. But I believe for the future of Victoria could be much more positive than the current headlines suggest. So Victoria still has a growing population. In fact, the fastest growing population in the country. It still has some of the strongest employment sectors, right? Major infrastructure and deep rental demand across many parts of Melbourne and regional Victoria. You know, the property I was just at, it had 5 people looking for every 1 room in that area, according to our data. Now, when political confidence begins to recover, buyers tend to look at those fundamentals again. And by the time the wider market feels confident, 2, 3, 4 years after the optimism, some of the opportunities we're seeing today may already be gone, right? This is the part that investors really need to understand. Uncertainty can create negotiating room, which is where we are right now. When fewer buyers are prepared to act, vendors and developers tend to become more flexible. It's a buyer's market out right now because our clients are securing properties at very strong prices. In some cases, we're able to secure deals for clients at $200,000 below comparable market value based on the valuations and comparative sales, right? That's a meaningful difference. It can reduce how much an investor needs to borrow, can improve the equity position right at the beginning so you're ready to secure that kind of deal. So it might also help you when you build a cash flow positive property and produce a stronger result because the investors avoided paying an inflated purchase price. Now, a lot of people go, Gora, what about land tax in Victoria? Yeah, let's talk about land tax. I was speaking to a friend of mine just earlier today. Aaron, shout out to you. And literally like half an hour ago, and he was like, Gora, I'm tired of paying land tax. I go, I get it. And that's why most of our properties that we help build clients have the ability to get land tax exemptions, right? And that's something I don't think gets mentioned very often. We get land tax exemptions, right? Now, these opportunities don't always appear when the market feels comfortable and easy. They get appear during periods when buyers get distracted by elections, interest rate speculations, or political headlines. Because let's be honest, everyone loves a good headline, right? Prepared investors, though, they're prepared to look at the deal in front of them. They're asking whether location has demand, whether price is supported by comparable sales, and whether income gives a property a realistic chance of remaining cash flow positive. That, my friends, is where the opportunity is today. God, I love salvia. Some Victorian investors might be thinking, you know what, I'm just going to wait till after the election. But what if you're expecting to receive in November, but what if those prices go up by November? Because if you're thinking it, others are thinking too. So the new Victorian government direction improves business confidence regardless of whichever party. More buyers are going to return to the Victorian markets because Victoria is underpriced, and I'll give you proof. So recently, Tim Lawless from Cotality, RP Data, CoreLogic, whatever you want to call them, right, sat down with Mark Borish, and he said, typically over the last 30 years before 2020, whatever happened in 2020, we're not going to talk about that now, Melbourne and Sydney have historically had a 20% gap between them, historically. Currently, that gap is 55%. So one of two things needs to happen. Either Sydney's going to come crashing down, highly unlikely, yes, you might have some softening in the market, or Melbourne's going to catch up. Now, that's not fundamentals for the next 2 or 3 months. I'm talking long-term fundamentals here, right? Because property should be the long game, not the short game, in my opinion. Now, am I guaranteeing that it's going to growth? No. I'm just giving you an example where it's missed the growth, right, in the past few years. I'll give you an example. So in my early days of business, I help clients invest in Toowoomba. Now, some of you might know Toowoomba to be a fantastic place. So there was this one development that I helped put in 4 or 5 different investors into this one development. I thought it was a great deal. I thought it was the best thing since sliced bread. Unfortunately, the builders took a lot longer to build. And my clients were upset that they didn't receive necessarily as much instant equity on the duplex deal as they should have. Now, what was that an issue of? The market missed the growth at that point in time 12 years ago. And a lot of them held on for maybe 2-3 years after, saying no growth. And I used to get these phone calls, Goro, the market hasn't grown. You put me into this. I feel like I've had a bad deal done. I was like, hey, the market's just missed the growth corridor. Hold on, you will get the growth, because growth doesn't go like this. Growth goes like this, right? Now, you've missed some growth. It's okay. The market will catch up. And I checked the data of one of them. One of them sold in 2018, late 2018, just before growth started occurring. Because late 2019, growth started occurring. And now that same property is more than double what they purchased. If they just held on, they would have had that growth. And that's a really important lesson for everyone, right? Just because a place has missed a growth cycle doesn't mean it's going to have the growth's going to be missed again. Now, look, here's the thing. Interest rate concerns are going to continue to ease because we've had the interest rate pause. And group of buyers are going to start looking again, right? It could mean competition for the same properties. And the discounts available today, they're going to disappear, right? A property you can negotiate on now is going to cost more once the confidence returns. So waiting until November does not guarantee you a safer decision. It just means entering the market alongside everyone else who was waiting alongside with you. Now, that is why I believe now is a good time to buy for an investor who's finance ready and has a clear strategy. And yes, I'm not discounting. You still need to do the work. You still need to check the numbers, the location, rental demand, and the risk. But you should not assume that waiting will improve the opportunity. Sometimes a better deal is available while confidence is still rebuilding. I mean, what's that Warren Buffett quote, right? Be greedy when everyone's cautious, and be cautious when everyone's greedy, right? So when you combine a strong purchase price with a well-researched cash flow strategy, you give yourself a better chance of holding the property through future political changes. Oh, sorry. Properties and beers, right? So here's the thing, right? I'm quite bullish about this leadership change because we're not just encouraging economic development seeing this week. It's inflation data is also on our side. It's reduced. It's one of the biggest things that was the immediate concern facing mortgage holders. And that brings more confidence back into the property market. And look, the latest inflation results given property investors something worth paying attention to. Annual inflation is eased to 3.8% in June. It came below expectations. And honestly, the likelihood of interest rate in August fell sharply, basically down to zero after the figures were released. For mortgage holders, that's encouraging. For investors preparing to buy, it could mark an important change in market confidence because we spent a long period hearing about rate rises, higher repayments, and pressure on household budgets. We might have one more rate rise, right? But the good news is we're not having one now. In fact, we might not have one at all. But if we might have one now, it's better to get your borrowing capacity done now rather than in the future where your borrowing capacity is going to be lower. Now, the direction is beginning to look a lot more positive, and that's where some of the better buying opportunities appear. Now, we test our clients 2 to 3% above where the market is right now. So let's say the interest rate is 6%, you'll get tested at 9.5%, right? The market might still feel uncertain, and some buyers are still hesitant. Some vendors are still prepared to give really good deals, like we've had for some of our clients. But the conditions that are creating hesitation are beginning to improve. I can see that in the market. The combination that creates a valuable window for investor is shortening, right? Now, here's the thing. You rarely get a letter in the mail going, hey, the difficult period's over. Let's go buy a property. That change usually happens gradually. And when inflation comes in lower than expected, concerns about another rate rise begin to ease. And you know what? Those finance conversations, they start becoming a lot more positive. By the time the wider market feels comfortable again, pricing and negotiation conditions, they've already changed. That, my friends, is why preparation is so valuable. You don't need to predict the exact month of the next rate cut. You need to understand whether the property works under the conditions available today as well. I think that's really important because you need to ask the important questions like, can you comfortably afford it? Is the purchase price fair? Is there genuine rental demand, right? Does the projected income give the property a realistic chance of producing positive cash flow? And when you get to answer these questions properly, you're in a much stronger position than someone waiting for the market to tell them what to do. So here's the honest part, right? Right now might still look like a really bad time to buy if if you're just listening to the damn headlines. There's a lot happening. Rates have been higher, right? Confidence has been lower. Investors have plenty of reasons to feel cautious. But if you understand the market, you've prepared financially, you know what makes a deal worth pursuing, this can actually be a pretty good time to invest. Now, you might have a fewer buyers actually competing with you, and you've probably got a lot more room to negotiate. You might also be able to secure a property at a price that becomes harder to achieve once confidence returns. Why do I know? I did this myself a few years ago. There was a lack of confidence in, I want to say, 2021. I purchased a property at 550,000. There's another property less than 500 meters away that's selling for double that price. This is where informed investors, we've got an advantage. They're not ignoring the market. They're understanding what's happening and then use that information to make a considered decision. We're already seeing clients secure strong deals during this period. In some cases, as I said, 200K below market value, that's nothing to be sneezed at. These results aren't available everywhere, and every deal needs to be assessed properly. You need to get a proper buyer's agent, which we have in our team, really help you out in. But they show what can happen when investors prepare before the wider market turns. Now, saying this is a good time to buy doesn't mean every property is worth purchasing. Hell no. An investor still needs a clear purpose. Maybe it's the next property needs to reduce the cash flow pressure across negatively geared assets, right? Perhaps an investor, as you want stronger income as they move closer to retirement. Once that purpose understood, the property can get reassessed against it. So if your goal is cash flow, the projected rent really needs to be tested carefully. You need to understand the assumptions behind that income and realize that property is a long-term game. To understand vacancy management and finance costs, the investors like yourself need to check if rental demand is deep enough to support your strategy over time. Now, that's how a smart investor takes advantage of the current market without becoming reckless. They act with preparation, they understand the deal, and they're willing to walk away if the numbers don't support the purchase. And you know what? Here's my summary. You shouldn't rush. You should see if there's value to become ready now. Confirm your borrowing capacity and know what level of repayment you're comfortable with. Understand the type of property of your portfolio, because you know what? A well-bought cash flow positive property can give the investor income from the beginning while positioning them to benefit if the wider Victorian market strengthens. So the picture is becoming a lot more encouraging. Inflation's eased, immediate concerns around another interest rate rises reduced. Victoria is probably entering a more commercially positive period under its new premier, or the newer one in November, depending on what you think the market's going to do. While confidence is still rebuilding, we're seeing opportunities that prepared investors get to take advantage of today. Now, I want to show you actual yield club properties that show what these opportunities can look like. The first property is a 5-bedroom, 5-bathroom co-living home. The purchase price is only $850,000. The projected gross rent, $1,500 a week. We're presented with a projected gross yield of 9.17. Now, the second property is a little bit more interesting. It's kind of like a secret property we've got access to because I created 5-bedroom, 5-bath hybrid property. The purchase price is only $985K. With a gross rental income of up to $150,000 a year, this represents a yield of 15.22%. Now, those yields are going to naturally attract attention. 15%, 9%, but a percentage alone cannot tell you whether the property is suitable. Let's start with the co-living home. 5-bed, 5-bath. Each room can produce a separate rental income. Now, here's the thing. They only work in some areas and not other areas. In fact, I was at a handover today, as I mentioned, where I know that property will work because we've done the due deal. However, a property 4 kilometers away, I know won't work because it's in the wrong location. Now, with co-living, the good thing is one vacant room doesn't automatically remove the income from the other occupied rooms. You can still make your rental stream more diversified. And you know what? We still need to confirm demand. Who's expected to rent these rooms? What sort of employment, education, transport options are nearby? Who's going to be the property manager here? Have we interviewed them? What are a lot of these questions get asked, including, does have, experience management, tenant compatibility, so many questions, but a good manager and a good advisor in this space will really be able to help you. Now, of course, the 78K is projected gross rental income, just like we did for our client Ash, whose projected gross rental income, we started at about 75 when he came on board. His projected rental income is up to $83,000, right? That's pretty cool. Now, of course, we've got to take out our costs, and the results, they're going to vary based on your deposit, loan, interest rate, and tax position. But you see how cash flow positive properties change everything for the investor, right? Now, I want to also talk about something which comes up on my calls that I do often. Goro, I don't want to build something. I just want something done for me. Yeah, cool. Who's selling the property that's already built, right? Because I'll give you an example. Ash, right? He picked up the property at 360K. That land was worth 450. He spent X amount of dollars on it. I won't tell you how much he spent, but there's not a chance in hell he's selling that property under $1 million. And it cost him a lot less than that, right? So, sure, you can have the done for you and pay the 150K more if you're reading between the lines, or you can save the 150K and take the very small risk of developing something that makes a profit. Kind of common sense, right? However, fear, which is false evidence appearing real sometimes, comes up in this place, and people say, Gora, I want something that, that's already built, that's already done. Unfortunately, unless you're ready to pay a premium, cool. So now either property can be unaffected by change of premier, right? Sorry. Here's the thing. Would properties be unaffected by change of premiers? Of course not, because no Victorian property sits outside government policy, land tax, rental laws, planning laws, right? It can affect any investment. The better question is whether the property's got enough financial room to handle reasonable change, because a property earning $500 to $600 a week is going to require significantly monthly contribution, and it's going to hurt, especially an older pre-existing one that might need $100,000 of reno, like my friend earlier today was talking to me about. Or you could work for a property that gives us substantially more rent and have a larger buffer. That buffer, it can help you retain the property through difficult periods. But income isn't enough. You need to purchase it at a sensible price, and now is more than sensible to purchase it. And that's why a Yield Club property doesn't go directly from a listing into a client's portfolio. We assess every single deal, location. We examine the strategy. We test the hell out of it to see where it's going to fail. Now, a property could have projected yields of 16.96%, still be wrong for someone. Another investor might be suited to 9% and still might be unsuitable. Someone else might not be ready for either. The job is to find the investment that fits the investor strategy and gives them a realistic chance of building positive cash flow over time. And that brings us back to the two headlines we started with. Vic has a new premier, inflation's eased. Neither give us a complete answer about what investors should buy, but that answer comes with the numbers, the demand, and the role the property needs to play in the portfolio. So here's the main takeaway from today. Victoria may be entering a much more positive period for property investors. We have a new premier who's more open to business investment, and inflation's coming lower than expected, right? While many investors are sitting back, good properties are being negotiated at prices that are going to be harder to secure once confidence returns. So we're already seeing clients purchase property as deep discounts, right? The opportunities aren't going to be available on every property, but it shows that what can happen if you're prepared to act while others are still sitting on the sidelines. Yes, the election's on 28th of November. There's going to be more announcements between now and then. Some are going to be useful. Others are going to create some speculation. So keep an eye on what's being proposed and bring the conversation back to the property in front of you, right? These are the questions that help you make considered decision, because until November might give you more political information. It's going to also mean facing more bias, less negotiated room, and higher property prices once confidence returns. And for someone who's finance ready, got a clear strategy, this could be a good time to buy. And look, if you'd like to see more examples similar to the co-living and hybrid properties we've got access to, subscribe to our weekly cash flow memo. It's free. Every week, we share practical property education, observations on the market, and a few snippets from our exclusive properties being reviewed through the Yield Club. Now, it gives you a better feel for types of cash flow opportunities that are out there. You'll find the subscription details in this live stream. Just drop me a line, say, Gora, I want access to the cash flow memo, and I'll get you signed up for it. Also, take a moment to check out if you're following Ethical Property Investments on Facebook and Insta. You know what? Search for us. That's how you find it. So if you're currently trying to decide a property before or after the Victorian election, or whether a cash flow positive property could suit your portfolio, go ahead and book a strategy conversation with our team. You can drop me a message on the chat. We're happy to chat. We're going to look at where you are now, what type of property you want to achieve, whether any of the strategies we work with are generally appropriate for you. Thanks for joining me. Have a fantastic weekend. I'm Gaurav Gupta from Ethical Property Ethical Property Investments. Do good, make money, and I'm going to see you next week for another Properties and Beers. Cheers, guys.